Brisbane just hit a record-breaking 0.8% rental vacancy rate. Some of the suburbs on today's list have already surged 19% in just 12 months. But by the time the mainstream media tells you to buy there, the insiders have already taken the profit and you have missed the window. Today, we are looking at the data before it hits the headlines. By the end of this video, you will know exactly which 8 Queensland suburbs are primed to explode before 2027, including one specific suburb analysts say could double in price by the 2032 Brisbane Olympics. Explosive property growth always comes down to 3 things happening at the exact same time: massive infrastructure spending, relentless interstate migration, and extreme affordability pressure. Right now, southeast Queensland is experiencing all 3 at an unprecedented scale, supercharged by billions in locked-in Olympic funding. These 8 suburbs are sitting directly in the path of that money. Let us name them. Number 1, Springfield Lakes. Springfield Lakes sits 33 kilometres southwest of Brisbane's central business district, and it is the second largest master-planned city in Australian history. If you have not been out there recently, you need to recalibrate your mental image of this suburb. This is not a half-finished development estate waiting for its first supermarket. This is a fully functioning urban centre with its own hospital, university campus, train line, shopping district, and employment precinct. The $1.2 billion infrastructure investment in the Springfield corridor has been ongoing for a decade and is still ongoing, and the numbers are responding accordingly. House and unit values in Springfield Lakes grew 15.4% in the last 12 months to a median dwelling price of $782,000. Homes are selling in under 3 weeks, consistently. Rental yield sits at 4.4%, meaning you are generating genuine income while the capital growth compounds around you. But here is the detail that most people miss about Springfield Lakes. The development is only now reaching the economic density that makes these communities truly self-sustaining. The suburb is passing through the inflection point where the critical mass of residents, businesses, and services crosses the threshold from estate to city. Every suburb in Australian history that has crossed that threshold has experienced a second wave of capital re-rating as buyers stop discounting the location and start paying full price for the lifestyle. Springfield Lakes is at that threshold right now. The brochure promises a master-planned lifestyle. The data confirms the lifestyle is now real. And the price has not yet caught up with the reality. Number 2, Toowoomba. If you are talking to anyone in Queensland property right now and you say the word Toowoomba and they dismiss it as that town on top of the range, that person has not looked at the data in 12 months. Toowoomba is Queensland's second largest city, and it is growing faster in both population and property value than most people inside the industry are acknowledging. House prices in Toowoomba grew 15.8% year-on-year, according to the most recent data, with a median house price sitting at $670,000. Units are recording even stronger rental performance, with yields of 4.8% at a median of $425,000. The vacancy rate in Toowoomba sits at just 0.8%, matching Brisbane's record-tight figure. But the mechanism driving the long-term growth here is not the rental market. It is the Inland Rail project. The Inland Rail is a $16 billion federal government freight infrastructure project connecting Melbourne to Brisbane through Toowoomba, creating Australia's largest freight corridor. It is the biggest inland infrastructure project in Australian history. It is creating logistics hubs, warehousing precincts, and thousands of permanent jobs in the Toowoomba region. And those jobs are permanent, not tied to a construction phase, not dependent on resource prices. Permanent freight and logistics jobs anchored to the continent's primary inland rail artery. At $670,000 for a median house, Toowoomba is still dramatically more affordable than Brisbane, offering a genuine affordability gap that is closing, not widening. If you are looking for a market where every fundamental aligns simultaneously, jobs growth, population growth, infrastructure investment, rental demand, and affordability headroom, Toowoomba is it. Number 3. And this is the one almost no one outside the Logan corridor is paying attention to, Logan Central. Before you move on, before you dismiss this suburb based on reputation, stay with me for 60 seconds. Because the data here is extraordinary, and it is being almost universally ignored by the mainstream media. Logan Central's units grew 26% in a single year to a median of $441,000. Logan Central's houses grew 11.89% to a median of $720,000. Over the last 5 years, units in Logan Central have appreciated 194%. That is not a typo. 194% over 5 years, in a suburb that most Sydney and Melbourne investors have not yet crossed off their mental blacklist. Here is what is actually happening in Logan Central. The Logan City Council has partnered on a $14.5 million Logan Central Economic Hub, which is scheduled to open in mid-2026. That same precinct is within walking distance of the Logan Hospital, which is currently undergoing a $1.1 billion Stage 2 expansion, the largest hospital upgrade in the history of southeast Queensland. Logan is a local government area of 350,000 people, making it the 4th most populous local government area in Australia. It has its own rail network, its own motorway corridor, and a diversified employment base that is no longer dependent on any single industry. And the most important insight about Logan Central specifically, the buyers who are discovering it are not speculative investors chasing yield. They are first home buyers and young families who cannot afford Brisbane but need Brisbane access. That is the most stable, durable demand base in the entire property market. People buying because they have to, not because they want to speculate. The reputation of Logan is a hangover from a different decade. The data of Logan is the story of right now. Number 4. Upper Coomera. Upper Coomera is where the Gold Coast Northern Corridor and the Brisbane Southern Corridor collide, and it is currently one of the fastest growing residential corridors in the country. House prices in Upper Coomera grew 11% over the last year, to a median of approximately $869,000. Vacancy rates on the Gold Coast corridor are critically tight, and the specific piece of infrastructure transforming this suburb's accessibility is the Coomera Connector, Queensland's second M1 motorway, a project that dramatically reduces commute times to both the Brisbane Central Business District and the Gold Coast simultaneously. Why does that matter? Because before the Coomera Connector, Upper Coomera's fundamental weakness was time. It was not close enough to either city to justify its price point for commuters. That weakness has now been substantially resolved by a state government infrastructure commitment that is already under construction. The suburb's strongest demographic is families who are arriving from Sydney and Melbourne, buying with equity extracted from their previous home, and discovering that Upper Coomera offers a 4-bedroom house on a decent block, genuine school infrastructure, and a beach lifestyle within 40 minutes that would have cost them $2.5 million in Sydney. When you combine infrastructure-improved accessibility with genuine affordability relative to its lifestyle offering, and you add a migration wave of cash equity buyers who are not borrowing constrained, you create a demand floor that is extremely difficult to disrupt. Westfield Coomera is already open and anchoring the local retail economy. The primary and secondary school infrastructure is expanding. The jobs are following the population. Upper Coomera is not a punt. It is a corridor play on one of Australia's most permanent geographic growth vectors. Number 5, Surfers' Paradise. This is the one on this list that deserves the most careful framing, because the Surfers' Paradise story is real but product-specific. The broad Gold Coast market was identified by SQM Research as one of Australia's top-performing markets, with dwelling price growth forecast between 7 and 11% for 2026. Within that, Surfers' Paradise benefits from 3 independent growth mechanisms operating simultaneously. First, the international tourism recovery. International visitors are returning to the Gold Coast at record rates in 2026, and short-term accommodation demand is creating upward rental yield pressure across the entire residential unit market. Second, the 2032 Brisbane Olympics. The Gold Coast is a designated Olympic venue city for both sailing and athletics events, meaning direct government investment in Gold Coast transport infrastructure as part of the Games preparation is already locked in. Third, and most importantly for investors, the unit price gap between comparable beachside locations in Sydney and Surfers' Paradise is still enormous. A beachside unit in Manly or Bondi with ocean views will cost you $1.8 to $2.5 million. A comparable unit in Surfers' Paradise with similar views and equivalent beach access can still be purchased for between $700,000 and $950,000. That affordability gap between Sydney and the Gold Coast is driving a specific documented wave of interstate buyers. The critical product selection note. The growth case for Surfers' Paradise applies specifically to well-managed, owner-occupier-dominated unit complexes with manageable strata costs, not the aging investor towers built in the 1970s and 1980s with escalating holding costs. The suburb has both. Do your strata homework. Number 6. Crestmead. 22 kilometres south of Brisbane's central business district, Crestmead is the suburb that buyers land in when they have been priced out of every suburb to the north. According to Aussie Home Loans' most recent market data, Crestmead recorded 22.2% house price growth over the last tracked 12-month period, one of the strongest performances of any suburb in the entire southeast Queensland corridor. The entry point still sits materially below the Greater Brisbane median, which is precisely why the demand is so persistent. Crestmead sits inside the Logan local government area investment story, meaning it benefits directly from the hospital expansion, the economic hub development, and the inland rail freight corridor employment growth happening across the broader corridor. But the specific reason Crestmead is outperforming even its Logan corridor neighbours is straightforward. It is the last suburb in the affordability funnel before you exit Brisbane's practical commuter range entirely. That geographic position creates an almost permanent demand floor. When prices rise in every suburb to the north and the northeast, the buyers who cannot reach those prices do not exit the market. They move to Crestmead. The 22.2% growth confirms the funnel is working exactly as the geography predicts. Number 7. Newstead. 3 kilometres from Brisbane's central business district, Newstead is the suburb that reframes the entire conversation about what inner-city Brisbane can look and feel like. Units in Newstead grew 20.1% over the last 12 months, to a median of $882,000. The broader Newstead dwelling market has appreciated 54.8% over the last 5 years, making it one of the best-performing inner Brisbane suburbs by total capital growth across the cycle. Homes here are selling 36.4% faster than comparable suburbs in the same inner ring, meaning the market is tight, competition is fierce, and negotiating leverage belongs firmly to the seller. The growth mechanism in Newstead is the most straightforward on this list. It is the suburb where professionals arriving from Sydney and Melbourne land when they open their property portal, filter for 3 kilometres from the central business district, modern amenities and walkable lifestyle, and discover that Brisbane's inner city still offers what Sydney's inner city stopped offering at a reasonable price point 15 years ago. The Gasworks precinct has transformed Newstead's retail and dining offering. The Brisbane river frontage is accessible. The new farm park connection puts green space within walking distance. And the buyer, who is moving from a $700,000 Sydney apartment to an $880,000 Newstead unit, is not stretching their budget. They are celebrating it. Here is the part that tells you the window is closing. The CoreLogic days on market figure for Newstead is now under 29 days. That metric, more than any other, tells you what the actual buyer competition in a suburb looks like on the ground. Under 30 days means buyers are making decisions with urgency because they know waiting costs them the property. It is the single clearest signal that demand is running well ahead of available supply. And the number one suburb on this list, the one with the highest long-term upside, the suburb where multiple independent analysts are now making the specific claim that values could double from early 2020's entry points by 2032. Number 8. Woolloongabba, 2 kilometres from Brisbane's central business district, the suburb sitting at the exact epicentre of Australia's most transformative infrastructure investment in a generation. Let us build the full picture. The Cross River Rail Project, a $5.4 billion underground rail corridor connecting the northern suburbs to the southern suburbs through the heart of Brisbane, has its anchor station in Woolloongabba. That station is an engineering reality. A resident of Woolloongabba will soon be able to reach the Brisbane Central Business District in minutes by train. In Sydney or Melbourne, a suburb with those credentials would be pricing above $2 million for a median dwelling without question. Woolloongabba unit entry prices are still available at around $650,000. Then add the Olympic transformation. While earlier stadium plans were scrapped, the Queensland government has established a massive 106-hectare Woolloongabba priority development area. This urban renewal precinct will deliver thousands of new homes, active travel corridors, and direct connectivity to South Bank and the city centre. Multiple analysts, including research published via Mortgage Choice, referencing SQM and CoreLogic data, specifically identified Woolloongabba as a suburb where house prices could double from 2020-era entry points to 2032. Consistent with what has historically happened to Olympic host suburbs in every comparable global case. The yield available on apartments, while you wait, 4.8%, meaning the asset is self-funding, while the capital case builds toward one of the most certain near-term catalysts in Australian property. An Olympics that has been awarded, funded, and has its broader transport infrastructure already proceeding. Now step back and look at all 8 of these suburbs at the same time. Do you see the pattern? It is not luck. It is not chance. It is not 8 random postcodes that happen to do well. Every single one of these suburbs is being driven by the same 3 forces simultaneously. Committed, irreversible infrastructure investment, Cross River Rail and the priority development area in Woolloongabba, Inland Rail in Toowoomba, the Coomera Connector in Upper Coomera, the $1.2 billion Springfield infrastructure investment, the Logan Economic Hub, a structural migration wave that is permanent, not cyclical. Queensland receiving 21,595 net interstate arrivals in the most recent year, the vast majority of them arriving from Sydney and Melbourne with equity to deploy and no intention of going back. An affordability gap that is forcing discovery rather than choice. The most durable form of demand in any property market, buyers arriving not because the suburb is fashionable, but because it is the most financially rational decision available to them. And threading through all of it, the Brisbane 2032 Olympics. A 6-year countdown to the most intensely covered property media event in Australia's history, during which every journalist, every buyer's agent, every overseas investor, and every first home buyer in the country will be reading articles about the explosion of values in Brisbane's Olympic suburbs. The suburbs that explode hardest before 2027 will be the ones that are already in motion today, not the ones that get discovered when the Olympic coverage peaks. For your actionable shortlist. If you can only move on 3 suburbs from today's list, the data most strongly supports the following approach. For the highest long-term upside with a 6 to 10-year hold, Woolloongabba is the clear recommendation. Irreplaceable central business district proximity, massive urban renewal, the Cross-River Rail Station, and entry pricing that is still rational relative to where the comparable Sydney suburb would cost you $2 million and a 5-year waiting list. For the tightest supply and most consistent owner-occupier demand, with a strong 3 to 5-year outlook, Newstead delivers the numbers. 54.8% growth over 5 years, a days-on-market figure under 30. And an interstate migration tailwind that is structural and permanent. And for the underdog suburb that the data supports strongly, but the mainstream investor market is still not paying attention to. Logan Central, 26% unit growth in 12 months, 194% over 5 years, a massive economic hub about to open, a $1.1 billion hospital expansion nearing completion, and an entry price that still represents genuine affordability in the southeast Queensland market. The reputation of Logan Central is holding the price down. The fundamentals say it should not be, and that gap between reputation and reality is exactly where the best property returns in Australia have always been found. Here is the honest version of where Australia's property market stands in 2026. Sydney is stalling. ANZ forecasts a further dip before any recovery. Melbourne is bleeding under land tax, apartment oversupply, and the worst loss-making resale rate in the country. Perth and Brisbane are the engines driving every positive national headline you are reading, and within Brisbane and southeast Queensland, 8 specific suburbs are at the intersection of the 3 forces that have driven explosive growth in every cycle of Australian property history. This is not a market to wait on. At 0.8% rental vacancy, there is no cushion of slack in this market. At 21,500 net annual interstate arrivals and counting, the demand pipeline is structural, and at 6 years to the Olympics, the pricing clock is ticking. The buyers who will look back at 2026 as the year they acted wisely are the ones who did not wait for the headlines to validate the data they already had. If this video gave you a specific data-backed framework for how to think about southeast Queensland property before the rest of the market catches up, tap the like button. It takes 1 second and it helps more Australians access the kind of suburb-level intelligence that is usually reserved for the people who can afford a buyer's agent. If you want us to keep tracking the specific infrastructure timelines, migration data, and suburb-level vacancy figures that separate genuine opportunity from noise, subscribe and turn on notifications. We do this every week. Now, I want to hear from you in the comments below. Which suburb on today's list surprised you the most? Was it Logan Central's 194% 5-year unit growth that most investors are still overlooking? Was it Woolloongabba's urban renewal at a $650,000 unit entry price? Or was it something else entirely? Drop the suburb that surprised you most below. I want to see if everyone picks the same one. And if you are already living in or investing in any of these 8 suburbs, tell me what you are actually seeing on the ground, because that local intelligence is worth more than any data report.